Well, we have mixed markets starting out this morning, and Tesla's been bouncing up and down, but at least it's been in positive territory, recovering some of those losses from yesterday. But I would say the biggest thing in the news overnight economically was that our two largest trading partners are Canada and Mexico. Mexico, in particular, is allowing, and let's be clear, they are allowing huge numbers of migrants to cross their country and enter into the U.S. illegally. Along with this comes traffic in drugs, human trafficking, and guns. Canada's obviously less of a problem, but a problem nevertheless. Under the Biden administration, drug smuggling has increased by 596% along the northern border. Now, maybe that was from 1 gram to 596 grams, but 596% increase? Holy mackerel. Our third largest trading partner is China, and they are the source of much of the fentanyl that eventually finds its way into the U.S. through Mexico and maybe through Canada. So Trump is promising now to impose a 25% tariff on Mexico and Canada unless they take some unspecified steps to solve these issues. China is already facing a 60% across the board tariff, which I think would be much more nuanced than that when the truth comes out. And maybe there'll be small tariffs, maybe there'll be no tariffs. That's going to be all negotiated. But I think that what they're talking about with this additional 10%, that would be unless China steps up their efforts to stop the fentanyl from being made and exported from China into the United States through Mexico and Canada, and maybe some of it directly, I'm not sure. But in general, China has indicated that they are willing to do this, imposing the death penalty on fentanyl makers and exporters in China. The threats of these huge tariffs don't seem to be impacting stocks very much. Apparently, General Motors and Ford, I didn't look this up specifically, but they might have been a bit down. Stellantis was a tiny bit down. Stellantis would be affected the most, both from China, I'm sorry, both from Canada and from Mexico, but their stock was only down a tiny bit. So anyway, I'm not sure that I don't think that this threat is material enough and immediate enough to really impact the markets that much. Anyway, all three of these countries have responded to these threats, and all three of them responded in ways that didn't really address the issues. So we'll see what happens. Speaking of China, the Shanghai Tesla Gigafactory is doing its part to get to the record quarter this month, so far this month. 16,700 new Teslas, according to Sawyer Merritt, were insured in China last week, continuing Tesla's hot China streak. Cybertruck has been in the U.S., Tesla has dropped the price of the Cybertruck by $2,000. You can now buy it for $77,900. And then you get another $2,000 discount if you use a referral code. So, hey, that's pretty good. You get it for $75,900. And then there's all kinds of other discounts and offers and things going on. As I've said over and over again, if Elon has to stand in the middle of the 405 freeway with a sign and wave people off the freeway into the Tesla center, he'll do that. Anyway, AJ continues to believe that we have a path to the 515,000, and he lays it out in detail on X if you want to go check that out in detail. Sawyer Merritt does also note, however, that all of this discounting and maneuvering and giving 0% interest rates and whatnot is going to impact margins, and margins will take a hit in quarter 4. But you know what? There's so many moving parts on this with regard to what was being done at the end of quarter 3, with regard to how much improvement in margins we might be getting from the ramp up of the Cybertruck, et cetera, et cetera, et cetera, et cetera, that I think it will take an AJ to really do the work and figure out all the details and see where it all comes together. Anyway, speaking of threats, California Governor Newsom has done his own bit of threatening yesterday. He has threatened one of the largest employers in California, maybe the largest, I'm not really sure, but certainly one of the largest employers in California he wants to help the manufacturers of cars from other states and from other countries with incentives that would be to the detriment of Tesla. And then this would also come out of tax dollars. California is already in trouble economically. They had a big deficit. What in the world is going on here? Anyway, this threat is tied to the feds ending the $7,500 tax incentive that's now in place, the IRA. Well, I think, that might have impacted markets yesterday with regard to Tesla. Maybe they've got cooler heads today. Maybe that's why Tesla's rebounding because, for instance, the IRA deal may or may not ever end. And if it does end, I think we're looking at 2026. And Newsom is running for governor in 2026. Is he going to do this? Yeah, I don't know. I don't think it'll pass the California legislature because this is not like a typical thing with the California legislature where they're all just going to fall in line. There's going to be oxes that are going to be gored as a result of this. People looking at the potential for Tesla to just say, okay, forget you guys. We'll take our plants and our employees and we'll leave or go. We've done it before. We'll do it again. Number C, this would apparently only go to smaller players, people that are not yet very large in the business. I guess that's how he's justifying it. And so therefore, it probably wouldn't have very much impact on Tesla's sales. And then finally, if you're really a serious thinker about Tesla and you really believe that robotaxis are going to happen and FSD unsupervised is going to happen, then guess what? It's not going to matter anyway. Tesla's going to sell every car they can make in 2025, 2026, once FSD becomes unsupervised. Let me know in the comments below if you think that once FSD becomes unsupervised and approved for Robotaxi, that there will be any problem selling every single car that Tesla can possibly make. I'd be curious. I'm really serious on this one. I'd like to know what you think. That's what I think. What do you think? And in response to this California nonsense, Wedbush Securities maintained its outperform rating yesterday and a $400,000 $400 price target, a $400 price target on Tesla shares. I'm for that. Okay, Wedbush, you go. The firm addressed recent developments involving California's stance on electric vehicles, and they aren't worried. All right, this is Randy Kirk. Please hit the like button and the subscribe button and the notify button. What do you got today? Well, later on today, you've got Larry Goldberg, who was supposed to be on Monday, but this week is going to be on Tuesday. And then after Larry, later this evening, you'll have Brian White. And we did a great show. You're going to really like Brian White and I. Sometimes we've been mixing it up lately. He doesn't always agree with me. What's going on? Somebody said yesterday, they wanted to know what a Cybertruck bottle opener looks like. Well, that's what a Cybertruck bottle opener looks like. That's the camo version. It also comes in just a plain stainless steel version. That's what it looks like. It's a very solid piece of stainless steel, about the same gauge, actually a little heavier gauge than the actual Cybertruck turned out to be. It comes in a beautiful black box, kind of an Apple-esque kind of box that you expect, an Apple product to come in. So anyway, that's what it looks like. $25 for one, 20 for two, 20. If you get two, it's $45, which is $22.50 each. Anyway, all that information's down below. Let's go on because I got a lot here. Breaking. U.S. new home sales in October 2024 fell to 610,000, down 17.3% from September and 9.4% year over year. The median price, 437.3 average, compared to what? Inventory rose to 481,000 homes, which is a 9.5 month supply. That's starting to turn into an actual supply out there. Well, one of the things that's not mentioned in this story are the stories that are coming up. Don't forget, this is off season. This is when October is when you expect sales to go down, but that's 17.3. That's a pretty good drop. So speaking of housing, this is from Market Watch. Home prices in the 20 biggest U.S. metros lost more steam in September, buckling under the pressure of high mortgage rates and historic unaffordability, and maybe not as many sales. The S&P CoreLogic Case-Shiller 20-city house price index rose only 0.2% in September compared to the previous month. Home prices in the 20 major U.S. metro markets were up 4.6% in the last 12 months in September. So, they've been going up around 6%. Now we're talking about year over year, 4.6%. That's better. There's a deceleration compared to the increase of 5.2 in the previous month. Economists surveyed by Dow Jones Newswires and the Wall Street Journal expected the 20-city index to increase 4.8%. And it was only 4.6. A broader measure of home prices, the national index rose 0.3% in September and only up 3.9 year over the year. All numbers are seasonally adjusted. Home prices posted the slowest gain since September of 2023. Now, seasonal adjustments, I was talking about this a minute ago. See, they did mention seasonal adjustment, but remember, last year, the seasonal slowdown never happened. So this year, we're getting a more normal year. That might be part of what we're seeing in terms of this large hit. But I do think that there's a slowdown due to the elections and uncertainty, et cetera, which also should have been taken into consideration. We'll see what happens next month. To be sure, even if prices are growing less rapidly, the article says, the 20-city and national index still inched to a new record high. Of course, they're slowing down, but they're still higher. The housing market is feeling the toll of high mortgage rates and record high home prices. Home buyers are shying away from the housing market, which is prompting prices to grow at a slower pace. Prices could lose more momentum in the coming months. The 30-year mortgage rate was largely below 7% for July, August, and September, which the Case-Shiller Index covers, but rose sharply after the presidential election in early November. Yeah, it's starting, I think, to settle down again now. All right, breaking from the 𝐄𝐦𝐚𝐲 letter on the same subject, a near record 84% of Americans believe it is a bad time to buy a home. That's according to Reventure. Over the last 4 years, this share has increased by a whopping 50 percentage points. By comparison, the peak of the 2006 housing bubble, 40% of Americans thought it was a bad time to buy a home. Yeah, but this comparison. I hate this comparison. People didn't think it was a bad time to buy a home during the housing bubble because everybody was making a fortune on housing, buying and selling, and doing all kinds of crazy, nutty stuff. This is a completely different, it's not even comparable. Even in the 1980s, when mortgage rates were as high as 18%, this metric was 5 percentage points level at 79%. Wow. Anyway, homebuyer sentiment has never been worse. Then from Global Market Observe, OBSERV, no E. This is the biggest U.S. housing bubble of all time. According to Reventure also, inflation-adjusted prices are nearly 100% higher than the 130-year average. Prices are now even higher than the 2008, here we go again, housing bubble. This observation is not necessarily a great point of comparison because the bubble was completely different than now, I say. Prices have just continued up under pressure of historically low inventories of home for sales and the pressure from increased demand on overall housing due to massive flows of migrants. You can't have no new building and have all kinds of people coming to the country, adding to the adult population that needs to find housing. You also have an aging population who is not moving out of their homes that they own outright at the highest numbers in history. None of this is mentioned in these articles. And they also, if they don't own it outright, they've got a 3% mortgage. They're not moving. Anyway, it's a big issue. I agree. No matter what the reasons are, it is an issue that needs to be addressed by what? Building more housing. And hopefully Elon and Vivek will get that done with some kind of changes at the national level in working with Trump. And speaking of them, Elon and Vivek are, according to Business Insider, are starting to shape the Department of Government Efficiency, or DOGE, and they appear to be turning to Silicon Valley for leaders who can support the effort. Musk loyalists, including the president of the Boring Company, Steve Davis, the private equity executive, Antonio Gracias, they are both involved in the department. The Washington Post reported both men are also assisting Musk at various points during his takeover. They also helped him with X, with the takeover of Twitter. The report said notable Silicon Valley figures, including Palantir co-founder Joe Lonsdale, the investor Mark Andreessen, the hedge fund manager Bill Ackman, and former Uber CEO Travis Kalanick, also involved in the department's early planning. Man, he is bringing in a brain trust. Okay, last week we had consumer sentiment. Today we have consumer confidence. According to the conference board, consumer confidence increased in November to 111.7. That is up 2.1 points from 109.6 in October. According to the Present Situation Index, which is based on consumers' assessment of the current business and labor market conditions, that increased by 4.8%. 4.8 points to 140.9. The Expectations Index, based on consumers' short-term outlook for income, business, and labor market conditions, ticked up 0.4% to 92.3, well above the threshold of 80 that usually signals a recession. Okay, so well above what would otherwise suggest a recession. Consumer confidence continued to improve in November and reached the top of the range that has prevailed over the last 2 years, according to Dana Peterson, chief economist at the Conference Board. November's increase was mainly driven by more positive consumer assessments of the present situation, particularly regarding the labor market. Compared to October, consumers were also substantially more optimistic about future job availability, which reached its highest level in almost 3 years. Meanwhile, consumers' expectations about future business conditions were unchanged and were slightly less positive about future income. Consumers' assessment of current business conditions in November, 21.3% of consumers said business conditions were good. That was actually down a little from 22. 15.3% said business conditions were bad, which was down substantially from 16.7%. So the good dropped a little, but the bad dropped a lot. Consumers' appraisals for the labor market, 33.4% of consumers said jobs were plentiful, and that was a little bit down, but 15.2% of consumers says jobs were hard to get, and that was way down from 17.6%. All right, so how is all of that impacting the markets? Because all that came out, at exactly 7 o'clock. It took me like almost 5 minutes to get it all figured out and get written down. So the markets could have changed in that amount of time. So where we've got Tesla up $5.42, which is about the high for the day. It was up at around $5. It went down almost to break even, and now it's back up $5.42. All of the Magnificent Seven are joining in that rally. NVIDIA, although only 91 cents. We've got the Dow down actually 295. Where's the rotation today? We've got the NASDAQ up 59.88 and the S&P up 7. So we go to the Cathie Woods. They are all down this morning. Mostly marginally, yes, mostly under $1. So, 44 cents, 33 cents, very small amounts. All right, so let's see here in percentages. We have the Dow down 0.62. We've got the NASDAQ up 0.35, S&P up 0.18, and Tesla up almost 2%. That is now actually $6.66. Nice recovery so far, Tesla. Okay, let's go look at those bonds. Oh, I didn't go to that new list I had, so I'm sorry. I'm going to only be able to give you the 10-year and the 2-year because this is still messed up. Anyway, 10 years actually up 6 basis points this morning, but not horrible. Still sitting at 4.322, which is better than 4.44. So 12 basis points better than the high, but I don't like seeing it going in this direction. I'm sure you don't either. The 2-year up 3.7 basis points to 4.289, and the 1 month, I don't have the 2-month or the 3-month, the 1 month is only up 0.9 of a basis point. All right, so let's go ahead and take a look at oil. Oil is up a little bit this morning, still under 70 though. Went up like 71, 72, back down to 69, 68 yesterday, and now 69.36 for Texas Intermediate. You've got Brent, similar, up about exactly the same amount, sitting at 73 though and 46 cents, which is $4, more than $4 higher. That would suggest still feeling some pressure from war efforts around the world. because those are over there, not here. Natural gas up this morning again, 1.13, recovering from its off day yesterday, $3.40. Gold also up a little bit this morning, recovering also 2,626. Silver up 0.81% at $30.50. And copper down 0.62, still well over $4 at $4.07. There's a wild ride in the currency markets because of Trump's tariff threats, it says here, but the changes are minimal, up 0.38 against the yen, up 0.06 against the euro. Okay, Bitcoin down 1,888 to 93,000. So that's about 7% down from its all-time high. And that is all we have to say about all of that. So yesterday, we had Brian White. I put it up a little bit late last night, but Brian White and I had a conversation that you might want to go back and check out. That I'll put the card up for right here. And then Brian White and I will be meeting again tonight about 7:45. Well, we've already done the show, but it'll be published about 7:45 tonight. Putting those late at night has turned out to be a really good thing. I guess that's a better time for y'all. And then Larry Goldberg, your number one favorite, by the way. Larry does get more comments. He gets more viewership than anybody else, even though everybody else is really good. But somehow Larry, I don't know, does he calm you? Or is it the fact that he likes to really rib me and give me a hard time? I don't know. We'll see. But Larry's on tonight, so be sure to check that out. Get your order in for your Cybertruck bottle opener. You know your friends are going to love them, your family members. I mean, I'm not kidding. Everybody that got them last year, they couldn't go on enough about how people were pleased with the item as a gift. Okay, that's it. See you later today. It's been great talking to you.